European credit crisis is not only adding worries to the market, but according to our next guest, creating investment opportunities. Well, joining us now is Brian McMahon, CEO of Thornburg Investment Management, which has $70 billion in assets. Bloomberg ranks the firm's income builder and global opportunities funds among the top performers for its category in recent years. Brian, welcome. Good to have you here on Street Smart. Where do you see the biggest opportunities? Let's start very sort of macro. Is it in the equities market or is it in the bond market at this point?
Well, I think the best opportunities at the moment are in the equities market because that's traded off rather hard. A lot of worry about Europe, which you've been talking about earlier in the show, but that rubs off into significant price declines in things like oil companies based in Europe, utilities based in Europe, some of which pay very good dividends.
We've seen it here in the U.S., of course, a lot of trading in sympathy. So a number of stocks, no doubt, unfairly penalized. Any particular sectors, though? You mentioned an oil company, you mentioned utilities.
Yes, well, at Thornburg Investment Income Builder, we like to play what I call possession offense. So we like to keep the ball, but stay on offense, but control it. And we control it with income. So we like telecoms. We like things like TDC, the incumbent in Denmark. We like KPN, the incumbent in the Netherlands. Around the world, we like China Mobile. We like Telstra, incumbent in Australia. On average, these stocks have yields that are around 8%. And we're happy to collect 8% while we're waiting. In Europe, we want to hedge the currencies. So we'll give away 1%. That's what it costs per year, approximately, to hedge the currency.
I notice you don't mention Deutsche Telekom there. You don't mention France Telecom. Are the big national incumbents, do you want to stay away from those? You're looking for the smaller sort of periphery countries because they've been hit harder?
I won't say we'll stay away from them, Matt. My first choices in Europe would be the ones that I mentioned. We do have a small position in France Telecom. We don't have a position in Deutsche Telekom.
Why do you want to go long these stocks? Are you not worried about a recession in Europe? Are you not worried about a global recession here? I've heard the word depression actually mentioned twice today. Ed Yardeni said, you know, if we have a double dip, he told Tom Keene this morning on Surveillance, then we'd really be in a depression. And I believe David Rosenberg, although that doesn't surprise you probably, mentioned that as well today. What do you think?
Yeah, I'm worried about everything. It's my business to worry, and I'm a professional worrier. However, I'm comforted by the fact that these stocks are well capitalized. They tend to have a net debt to EBITDA of about 2 times. And so I think we've got very, very seaworthy investment vehicles here, and we can muddle through. Whether revenue turns down or doesn't grow as much in an economic downturn, what we saw in 2008 was a very, very slight erosion of revenue, but certainly enough to continue to pay the dividends.
Now, talking about a dividend, you talked about a yield 8% on some of these stocks, quite high. But as we've talked about credit default swaps throughout this region, we've seen those spreads widen out dramatically. I mean, Greek debt, 2-year yield, right, close to 70% earlier this week. Why not the bond market, though, generally? You said there are better opportunities in stocks.
Yeah, there are. Spreads have increased, but the yields on the government bonds that spreads are calculated from have gone down quite low. I won't say that we don't see opportunities in the bond market, but they're kind of fleeting. It depends almost on what's the panic of the day. There's still a lot of money that wants to be in bonds. In most of the world, banks are liquid and are looking for loans. So we don't see the opportunities in the bond market today that we saw in 2008 and 2009.
All right. Let's take a quick look at the stock market, right? We're going to go now, Brian. Unfortunately, we got to go to break. Thanks so much, Brian McMahon, CEO of Thornburg Investment.